Hey, it's David from KCM, and I hope you're having a great summer so far. Hey, a week and a half ago, Jamie from our research team had a chance to go out to the conference for the National Association of Real Estate Editors and talk with three experts that we quote a lot. Lawrence Yoon from NAR, Frank Nothaft from Corelogic, and Ralph McLaughlin from Corelogic. Three experts on what's happening in the housing market. Let's listen to what they had to say to KCM members.
The real estate market currently is showing some improvement thanks to the mortgage rates falling. So home sales have bounced back. There is clearly more people trying to take out mortgages. Mortgage application has been rising up 5 to 10% compared to 1 year before, and home prices continue to rise. But the bottleneck is the lack of supply, especially for mid-price homes, moderately priced homes. There's plentiful inventory on the upper end, but on the mid-price and below, shortage of inventory. That is leading to, in some markets, to multiple bid process. Some home buyers getting frustrated, unable to purchase, or prices rising a little too fast compared to their income growth. So we need to assure there is a greater increase in supply. That requires more new home construction. So whatever it takes, whether it is reducing zoning regulations, expediting housing permitting process, or even tax credit to build more homes, because we need to build more homes. There's a great shortage of affordable mid-price homes. The home prices are currently at $277,000 median price across the country. It is an all-time high, but the price increase this year is anticipated to be more moderate, about 3 to 4% price growth nationwide. Some markets will actually see some price declines. In the upper end neighborhood, they will see some price declines because of less favorable tax treatment on mortgage interest and property taxes. But on the lower end, price growth would be stronger. Going into the next couple of years, prices, I feel very comfortable that it will continue to rise because we have a housing shortage. The economy is still creating jobs. The economy appears to be in decent shape. No recession over the horizon except for one risk. If there is a full-blown trade war, then I think we may face economic recession and job-cutting situation. But outside of that, economy is in good shape. So as long as we create jobs, low interest rate, home prices should continue to rise.
So despite prices that have risen at very slow rates over the past 6 months, we've seen home prices the home price appreciation decrease over the last 12, 13 months, we are starting to see signs that prices might rise again. In fact, the most recent case-shiller numbers suggest that this cool down may be reversing. And that's also happening at a time where interest rates are basically near lows not seen in almost 2 years. So right now it's actually creating a very opportune time for home buyers to get into the market. Not only are prices rising at the slowest pace since 2012, mortgage rates are also at some of their lowest rates in a couple of years. So that actually, we think it's going to draw home buyers into the market. We think that's going to push prices back up a little bit more, not to the points that we saw 4 or 5 years ago where they're growing double digits. We think it'll push prices maybe to grow by 4 or 5%. And if mortgage rates stay low like they are, we expect that to continue throughout the remainder of this year and into 2020. Now, of course, the biggest risk in all of this is a recession. We're now 2 weeks away from the longest economic expansion on record. If that changes and we go to a recession, we'll likely see prices start to moderate again, and we'll likely see interest rates fall even more than they have. But the good news is that the housing market does look very healthy. It looks like it's in a state that would be conducive to weathering a recession in good shape. So it's unlikely the next recession will bring a catastrophic collapse to the housing market like the Great Recession did. So home buyer demand is obviously going to be one of the things to really keep an eye on. Home buyers have been pushed to the sidelines, at least throughout the end of last year. And that was primarily because of higher interest rates and low inventory. We want to keep an eye on mortgage rates and also inventory going forward. We are seeing signs that inventory is rising. We expect inventory to continue to rise over the next 6 months, so keep an eye on inventory, keep an eye on mortgage rates, and also, most importantly, keep an eye on what's happening with global politics. One of the reasons why mortgage rates have fallen to near 2-year lows is because of uncertainty that has to do with a trade war with China, as well as political uncertainty in the Middle East. That all trickles down to mortgage rates, believe it or not, because of demand for the 10-year Treasury. So follow the 10-year Treasury note. If the 10-year Treasury note goes down, it means mortgage rates are likely to go down. Pay attention to political politics, but then also pay attention to what's happening with opportunity zones. Opportunity zones are very new. We think it's going to drive new demand into real estate that wasn't there before, particularly from investors. So if you're a real estate agent, make sure that you refresh yourself on what investors are after, because we may see money come from the stock market and into real estate at paces we haven't seen in decades. And those are going to be the things that I think we should pay attention to over the next 6 months.
Mortgage rates are a really low rate now. We have a 2-year low in mortgage rates at 3.7%. That's a shot in the arm for the housing market and for home buyers. Affordability has improved dramatically compared to 1 year ago. Rates are about 0.8 of a percentage point lower than they were last year. So I think that bodes really well for the rest of the year. We're not expecting any big increases in mortgage rates from the current level for the balance of this year. And so that should mean that home sales will improve, and actually I think the second half of 2019 is going to be much better than the second half of 2018. So in terms of home sales inventory, I think the home sales inventory is going to remain probably fairly tight in lots of markets. Now, even there, it varies so much whether you're looking at higher priced homes or lower priced homes within a local market. Typically, in a local market, higher priced homes, there's more inventory available for supply. Partly it's coming from new construction, so builders are building new homes with a high price tag. That's adding to that supply for the higher priced homes. We're not seeing much new construction though for lower priced homes. That's the entry-level market, that's the first-time home buyer market, and in that segment of the market, the first-time home buyers are also competing with investors who are looking to buy homes. And that's one reason we've seen so much upward pressure in prices for lower-priced homes and the shortage of inventory. The inventory that comes on the market for low-priced homes gets bought up very quickly, whereas for higher-priced homes, it stays on the market a little bit longer.
So here's what I heard in that, is that things are looking good and are going to continue to look good as we go throughout the year. There are a couple of things that I drew out of that. Affordability is at a great place. Appreciation is going to continue to happen and possibly uptick as we go throughout the year. And thirdly, this means drawing more buyers into the market. Let's get this information out.